Welcome to TradeTheMBI.com. This is John. This report is for the 4th. Well, yeah, that was, this is what I was saying to you all along. This whole idea that the market freaks out over every little negotiation tactic is something they're going to get used to in a while. But, now you've resolved the Mexico trade war and the Canadian trade war in less than 48 hours again. So Panama got resolved as well. Yeah, again, this is what happens when you have the big economic stick that you can wield around and create problems. Now, it was interesting because he did mention that Europe is next. China's already got theirs, so they're going to be having their discussion because what they did by lowering the menace, which really affects all the small packages that come in from China, are now going to get tariffed. That's going to have a big impact for a lot of these small value things, which again, even Canadians, they were already talking, some of the largest businesses were planning 60% of them to have some sort of facility built in the U.S. to make things to avoid any potential future tariff. And that's the whole point of it. It's not brain surgery, but for some reason, a lot of people just couldn't understand it. And that is certainly not inflationary in any stretch of the form. And I think we start to see that in some of the market developments. Now, we had the big rise as things were taking place, but that jump up obviously being faded off a little bit because, again, there's still too many people who are still confused by these constructs, which that's fine. We still are in a weak shakeout from a daily standpoint, so there's that to consider. The fact that we never got the dip or even a crossover from that. So there's still some, you want to say, dispersion or liquidation going on within any bumps that take place. Absolutely. And that's part of a normal flow, but we really pretty much sideways when you look at it from a median standpoint of price, from that initial move back here in December all the way through. We really haven't done anything. We just bounced around going back and forth. From an NQ, slightly better. You don't have a magenta dip underneath yellow yet, and you certainly aren't seeing a lot of short activity because, again, this is just something that people really aren't quite clear on how to react to. And it's strange to me because it seems rather obvious, but it's okay. We have to go with what is and just follow what the readings are, despite knowing differently and that it's not this catastrophic thing that they think. But that just means from a broader planning standpoint, the idea is that there's going to be a much more substantial growth. And I think, you're going to probably see it in things like the Russell, because you'll have smaller, lower mid-cap companies that are going to do far better under this kind of construct, maybe so more than the international conglomerates, because they're going to have to deal with some of these dynamics that smaller companies just won't have that as an issue. From a Treasury standpoint, they have no clue as to what to do with this. The Fed is still going to be tight because, again, it goes against all of their models because their models are all inflationary based, so they don't know what to do with it's not even a deflationary, but just a price modification. But it also takes a lot of pressure off. And the question then became, well, what about oil? Well, you just saw the Ukraine situation where they bombed a bunch of Russian refineries, which is certainly going to put pressure on Russia's ability to supply. But in a broader sense, what you've done is just basically said, well, some of the hurdles that had been installed from Biden that are getting removed, and then you're going to see much more from a domestic side of creation, and also just a lower demand from a worldwide standpoint if some of these other trade situations continue. But oil getting down to the 70, and like we talked about, you can break down below the 60 level. Changes everything, economic outlook wise, inflation outlook wise, all of that's going to be altered in a heartbeat, and it's moving in the right direction. Don't expect it's not going to have its spurts back and forth, but again, that's really all you have to look for is where oil goes in its relationship, and that makes a big difference. Now, the euro had taken quite a tumble on that news, but brought it all the way back up as they thought they were insulated from it. And again, in the morning, they thought that we were in trouble, but I think they're doing a lot to try and support it at this particular stage. But it's in a danger zone at this point because you can see how swiftly that can happen. And of course, they make fun of Bitcoin and all that, but you're talking about a major European bloc country with these kind of swings in a currency. Are you kidding me? You look at this chart and it's as though, the Eurozone pretty much halted economic activity, which is not far from the truth, but relative to the US, absolutely. They are shrunk. And it's not going to change. They have no idea. Now, from a gold standpoint, problematic here because, yes, you still have inflation. It hasn't stopped. There are some, road signs ahead and say, hey, there's going to be this tipping point where that shifts. And, you can already see what happened with the USAID moving into the State Department, closing the offices, getting a hold of the Treasury books, and just stop randomly paying people. Now, will it have a significant enough impact? Well, that remains to be seen. Every tens of billions that you save by not doing things, every tariff you collect, you start to mitigate the negative side of things. We'll see. Too early to tell. Too early to tell, but the trajectory is right. So from that standpoint, it's bullish from a credit market standpoint in the sense that at least there's more liquidity from a lending standpoint to regular business. From a Bitcoin standpoint, you can see quite that range. That was pretty impressive move right there. From the liquidation to buy it all back up, was healthy and filling positive extremes, going all the way back to November of last year, filling all that in, even with that just tiny little dip to it. Just a couple more left of it, but all in all, pretty clean stuff. ETH not having as good a time, and their problems persist. Still, even with the significant short rising within that shakeout is still ugly. So they have, in fact, filled all of their positive extremes going all the way back into November. And that was like right back up here. So that's completed. So sometimes it's just a matter of waiting for it. So what we saw here was the turnaround where we had the slight improvement of white MBI. We led to a little bit, but then magenta got over yellow. And then you had the crossover of the blue. And that all took place right as you passed the 23%. It's pretty straightforward from there. And then what do? We moved to the 50%. And so then you got just some back and forth. And then as we started to get weaker from a magenta standpoint, once you dip below that 25, that's usually a pretty negative setup from there. And that led to the eventual dip all the way down here. And then it's kind of holding its own. It's not in great shape, but you didn't have the MBI white spike above it, so you didn't end up with enough short move there. But you can see the turnaround change, and this is why I always love to look at that gold rising. Started to rise just as we got to that 23%, and then it kind of flatlined, which is your consolidation there. But once it ticked up again, that was the next move that led things higher. Yeah, I think that's all fairly clean, easy to see. Here we are in the European session right now. It has been back and forth, and I think that's a little bit misleading simply because the Europeans they have a much more negative bias on things right now because they don't know what's next for them in the coming days and whether it'll be mitigated before it happens or what the demand is going to be. Because that's another question. But from an intraday, you can see where we were. We started with the morning move, and it was just rocket ship up, and from there it didn't abate at all. Did happen under all positive extremes, so that left all the way down at the 59.95 from an intraday, but that's where it's interesting because then you go into what the European session did, and boom, you filled it. So. Isn't that beautiful how that works? Just a spike, that doesn't matter. The whole point is it retested that level, and that was the key. So there you have it. Long and the short of it for now. And I promised excitement for the beginning of February, but this is exciting stuff. So all good. As always, anything relevant, though, I'll put on the Skype chat for you. Have a good one. Trade well.